Hi guys, welcome back to my channel. Okay, this time I want to talk about insurance. What is insurance? The livelihood of the insured even is so high or the cost of the event so large the resulting premium is not relative of the amount of protection offered. Then it is not likely that insurance will be purchased even if on offer. Furthermore, as a accounting profession formally organized in financial accounting standard, the premium cannot be so large, though there is not reasonable chance of significant loss in the insurance. If there is no such chance of loss, the transaction might have to from insurance, but not the substance. The U.S. Financial Accounting Standard Board version number 113, accounting and reporting for the insurance of short duration of long duration loss. 3. There are the two elements that must be sustainable if not formally deductible. The probability of loss and the accepted cost. Probability of loss is really an empirical cost expressions. Well, costs are modeled with the liability of the reasonable person is possession of a copy of a car insurance policy and approve of loss associated with a claim. Present under that policy to make a claim reasonability with an objective evaluation of the amount of the loss receivable as a result of the claim. Insurable laws are ideally independent and non-catastrophic, meaning that the laws alone happen on the individual laws are not separate, allowed to rank up the insurance. Insurers may prefer to limit their sport to a loss from a single, even to some small protection for their capital base. Capital cost rise insurance ability to sell flood insurance as wind insurance and hurricane zone. In the United States, the federal government is full of special event area in commercial fire insurance. It is possible to spawn single property wholesale aspect value is will the exchange of an individual insurer capital considered. Such property are generally shared among several insurers. However, insurance be single insurance may increase the rise to the insurance market. In the company insurance an individual entity, there are basic legal requirements and regulations. Several companies should legally list all insurance inputs. Indemnity, the insurance company index of themselves the insurance does come certain loss only up to the insurance interest benefit insurance at the stage in the study books of the Child Insurance Institute. The insurance company does not have the right to recovery from the party of caused the injury and must complete the insurance result of the patient insurance already subnamed party for the damage, for example, personal accident insurance. The insurers typically must strictly suffer from the loss. Insurable interest must exist whether property insurance or insurance on a person involved. The concept requires that the insurer have a stage in the loss or damage to the life of property insured, but this stage will be determined by of the kind of insurance involved and the another of the property owner side or relationship between the persons. The requirement of insurable interest is disclosed insurance from company. One must good fight the insurers that insurers are bound be a good fight about policy and finance material must be disclosed. Contribution insurance which have similar obligations to insurance contribution and the indemnification according to some methods. Subrogation, the insurance company also has legal rights to purchase recovery on behalf of the insured. For example, the insurance may sue the liable for the insured loss. The insurance can waive the subrogation right by using this special clause. Cost proxima or proxima cost, the cost of loss, the buyer must be covered under the insurance agreement of the policy and the dominant cost must not be exposed. Mitigation in case of any loss or casualty, its asset owner must attempt to keep loss to a minimum of the recourse of the not insurance. To indemnity means to the make whole again or be rights to the position by the was to the extent possible prior to the happening of a specific event or period. Accordingly, the life insurance is generally not considered to be indemnity insurance, but rather contingent insurance claim earns on the concern of a specific event. There are generally three types of insurance contracts that seek to indemnify an insurance. One, reimbursement policy, pay on behalf or on behalf of police, and indemnification policy. Okay guys, this is brief discussion about insurance. Don't forget like, comment, and subscribe to the channel and see you